Joining me now with $725 billion in assets under management is Creative Planning President and CEO Peter Mallouk. You know, Peter, when analysts show this kind of enthusiasm, a threefold increase in a price target, the question becomes, the higher the target, the closer the top. Where do you stand on this AI trade and the euphoria right now?
I actually think the euphoria is well justified. And I think this reminds me a lot of when Google and all these companies were coming out decades ago, and everyone thought, well, gosh, they're up so much. How could they go any higher? And I realize we're starting from a very different valuation standpoint here. But the economy's changed quite a bit. Like the dollars with inflation has changed a lot, and the economy has expanded to a winner-take-all environment. And I think if we were talking about a 9-inning baseball game, we're not even done with the first out of the first inning. We have a long, long way to go. Competition's going to bring in other chip makers. There will be winners and losers, but demand is going to exceed supply for a very long time. So I expect it to continue.
So am I hearing you say that there may be a little bit of bubblicious activity in AI, that some companies, some stocks might fall by the wayside, but others, like, for example, I know you don't pick individuals, but Micron and some of these ones that are really very much at the forefront of the need for data centers and chatbots, should be the ones that continue to thrive?
That's exactly right, Liz. I'm old enough to remember companies like Lycos and Excite. So we had a lot of companies coming out during the internet bubble, and it became winner take all with most of the spaces around the internet bubble. And you had a lot of spectacular losses, a lot of bubbles bursting, a lot of companies going to zero, a lot of investors, way more investors lost money than made money. We're going through that again. There are going to be huge winners. We're watching some of them unfold in real time. And we're going to have a lot of periphery players come out with valuations that they're never going to be able to justify. I mean, these are being priced into being the winners of the future, and some of them will be. But we're going to start to see more and more players that won't be.
Well, you remember the Lycoses of the world. I remember Bob Davis, who ran Lycos. So, we're right there with each other, Peter. But do you also remember the boom and bust cycle that those of us who were born before, November 22nd, when ChatGPT came out, we remember this boom bust cycle of memory chips. And what follows a boom? We know there's a bust.
That's right. It's not just the AI revolution that's happening here. You also have a lot of money in the marketplace. This is a very risk-on environment. That's why we're seeing all of these IPOs come to market all of a sudden with record valuations. There's just a lot of cheap money and a lot of demand and a lot of risk on. And I think that all of that on top of the AI revolution is what's driving this. You get a recession or a pullback for any of a million different reasons. And, these would obviously get smashed over the short run, but that won't change the long-term story of this is real. There will be some really, really big winners, and there will be some spectacular losers.
Well, the consumer is starting to worry about being on the losing end. We got consumer confidence this morning for the month of May, and it saw the first retreat in 4 months. And then that is on the heels of last week when we got consumer sentiment for the month of May. Two different surveys here. Consumer sentiment dropped to a record low, and it's not looking healthy. So in this atmosphere, and again, Thursday, I believe we are getting the Fed's favored inflation gauge, the PCE, the personal consumption expenditure number. So we'll know what inflation is doing at this point. Tell me exactly what you tell your investors. You got quite a few of them. What are you saying? Stay heavy duty invested in stocks?
Well, I think that the consumer sentiment, really interestingly, is a contrarian indicator. The University of Michigan has a very famous study around the consumer that the more negative the consumer gets, the more positive the stock market returns going forward. So that actually makes me even more bullish than I already am. Look, as an advisor to our tens of thousands of clients, I'm looking at the very big picture, which is over a multi-year period, do we expect inflation to persist? There's nothing that Biden or Trump or Democrats or Republicans have shown me that shows any fiscal discipline whatsoever. Of course, inflation is going to have to persist. And I think you combine that with growing earnings and being in the middle of a technological revolution, which tends to be a very big indicator of economic expansion, and rightfully so. There are just very, very big things in the long-term investors' favor.
Okay.
Are valuations cheap? Absolutely not. By every major measure, the stock market is on the top end of valuation. It just may be justified. I think we'll see a big breather here going into the midterms and the summer months. But stepping out a little bit, I'm very bullish.
And by the way, of all stocks to have a cheap valuation, Micron's forward PE right now is just 15, while the rest of the market is more like 22.
I'll take that over Palantir all day long.
Okay. We got Micron at $1 trillion market cap. Peter, good to see you. Thank you very much.